Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your hosts, Mark Trice and Jesse Hamilton.
Good morning, everybody. Welcome to the Spend Life Well Show. My name is Jesse Hamilton, and I'm joined by my co-host, as always, Certified Kingdom Advisor, Mark Trice. I want to welcome you to the show this morning where we apply biblical wisdom to your financial life. One of our verses for today is Psalm 1 and 2. Blessed is the man who does not walk in the counsel of wicked, or stand in the way of sinners, or sit in the seat of mockers. But his
Can you hear me now, Jesse?
Oh, there you are, Mark. Good morning. How are you?
We don't. It's so typical audio problems with trying to get going. We test everything. We come on the show early in the morning before we broadcast, test everything. Everything's working fine. And then all of a sudden it doesn't. It's kind of crazy doing radio, especially when you're not sitting in the studio of the Bridge, Austin. But Jesse, I didn't want to interrupt you, but go right ahead.
Yeah, well, we were right in the middle of Psalm 1 and 2. The second half of that says, but his delight is in the law of the Lord, and on his law he meditates day and night.
Well, folks, this is a live call-in show, and I know there have been many of you listening over the last few weeks, talking as we talk about biblical wisdom and how it applies to your financial journey. We want you to call us right here in the studio at 452-1120, 452-1120. And we want to talk about your financial questions or just things that are on your heart that you really want to share about your financial journey. We'd love to visit with you about that. And Jesse, thanks for kicking off the show.
Sure.
I'm Certified Kingdom Advisor Mark Trice. Jesse, what's on today's program?
So on today's show, we're going to have a conversation about the perspective on possessions. And we're also going to talk about what happened in the financial markets this week and how events around the globe might impact your portfolio. We're going to also hopefully answer a few questions from our mailbag. If you've been sending us emails at our radio at spendlifewell.com. I know a lot of you are shy and caring to not ask your questions live, but we encourage you to give us a call. We're not going to make you feel stupid or anything. Hopefully not. Right, Mark?
Yeah. I mean, a lot of people, financial stuff's kind of mysterious to a lot of folks. And a lot of folks are nervous that they'll sound silly or whatever on the radio or asking a question. It's like, there are no silly or stupid questions, because that's why we love talking to people, because we just want to help. And if you've got a question, I guarantee you that there's probably 100 other people that have that same exact question. So we'd really like you to call in at 452-1120, 452-1120, or you can send us a message at radio@spendlifewell.com. We're also on social media, right?
Yeah, we're on Facebook. You can watch the show live from anywhere in the world on our Facebook streaming source there. You can find us online on our website, spendlifewell.com/radio. And we have a few other social media channels as well. But I would like to mention that we have some webinars coming up. If you guys are interested in signing up for those, you can find the sign up on our website, spendlifewell.com. Right after the show today at 9:15, we're going to host the monthly market update, which is actually a special one because it's a quarterly update. We're going to talk about the entire first quarter of 2022. A lot of exciting, interesting things going on in the market. We're going to put some charts up and talk about a little bit more technical side of things on what's happening.
Yeah, we can even talk if you've got something in your portfolio, you're curious to see how it's doing, we'll pull it up on the screen, that holding, and talk about it a little bit and give you some feedback on that as well. That's something that we do on a regular monthly basis at the first Saturday of the month, right after the show. And we'll hope that you'll join us for a few minutes to kind of get in more depth into things that are really going on in the markets this week. But give us a call here at 452-1120, 452-1120. Jesse, it's been kind of a up and down week this week in the markets.
Mm-hmm.
And, we'll talk more about that in the next segment. But today, I wanted to visit with you all about a few things. And we as Kingdom Advisors, as members of Kingdom Advisors, we have a monthly study group. And we're talking this month about perspectives on possessions. And the well-known author, former pastor, John Maxwell is the guest on that study group. And I just thought we would summarize and talk a little bit about what he said about some of his things on views on possessions, because how we view possessions and our wealth really is indicative of our heart condition.
Mm-hmm.
And I don't mean whether or not you've got blockage in one or two arteries. I mean, what's our worldview towards things that God has blessed us with?
Mm-hmm.
And I'll kick it off by saying there's really three perspectives on possessions. And Jesse, if you pull your Bible app up, because I didn't put this in our notes here, but
Sure. Luke 10.
everyone probably remembers the story of the Good Samaritan, right?
Mm-hmm.
And we know there were really three or four characters in that story. Now, in Luke 10:30 through 37, Jesse, did you find that?
Yeah, I did.
All right, good. Why don't you read that to us? Because I just want people to understand the context of the story we're talking about here.
So it says, Jesus replied, "A man was going down from Jerusalem to Jericho, and he fell among robbers, who stripped him and beat him and departed, leaving him half dead. Now by chance a priest was going down that road, and when he saw him, he passed on the other side. So likewise a Levite, when he came by the place and saw him, passed on the other side. But a Samaritan, as he journeyed, came to where he was, and when he saw him, he had compassion. He went to him and bound up his wounds, pouring oil and wine. And then he set him on his own animal and brought him to an inn and took care of him. And the next day he took out 2 denarii, gave them to the innkeeper, saying, 'Take care of him, and whatever more you spend, I'll repay you when I come back.' Which of these 3 do you think proved to be a neighbor to the man who fell among the robbers?"
Yeah, so just I thank you for sharing that, Jesse, because I want to make sure people understood, the parable of the Good Samaritan in Luke 10. And so what there are 3 different perspectives. The first one we'll talk about is just really the robber's perspective on possessions, right?
Mm-hmm.
What's kind of their view, Jesse? I mean, obviously they're going to rob this guy and beat him up, but
Yeah.
what's their view?
What's yours is mine, and I'm going to take it. We're all born into this world as robbers.
You really think so? I think so too, because I think that we have the perspective, especially if we're living in amongst the world, and we get this every day when you think about the messages we receive on the billboards, the radio. Hopefully, if you're not listening to the bridge every day, you hear these types of messages, but you deserve it, right? You deserve to take it. If it's yours, you want to claim it, name it, and claim it. To quote some prosperity theology there, which we don't believe in, but what's yours is mine, and I'm going to take it. And that's the perspective of the robbers. And I would argue that maybe there's a little bit of that in all of us.
I was going to say it's painfully accurate to the world that we experience every single day.
Yeah, because we deserve it, right? And we deserve to take it if we want it. And I think that's just kind of that's really kind of, that hits home, because I like to think that I'm not that way, but on many fronts, do I think that from time to time? Well, maybe. Not that I'm going to go rob anybody,
Mm-hmm.
but I do have that attitude sometimes that that if I want it and I deserve it, I think, then I should go get it. Not to steal, but I should maybe direct my finances in a way that allows me to do that thing or get that thing or obtain that thing.
Sure.
So then there's also the priest and the Levite, all right? Their perspective.
These are the
Now,
people that are like they're socially high ranking. They're important, right?
right, and in this time for sure, and it's like, you know, what's mine is mine, and I'm going to keep it. And
We see this a lot.
yeah, and so I was having dinner with my kids one night, and on my left sits my 8-year-old Faith,
Hmm.
and Faith is out having fun at Camp Peniel near Marble Falls this weekend.
Oh, that sounds like fun.
Oh yeah, they're doing all sorts of cool stuff. But anyway, Faith is 8. She's the strong personality, and we were having hamburgers. It was Saturday night, and we had some French fries as well. And I just kind of casually uh, went over there and just slipped my hand over on her plate and stole a French fry. And of course, I got caught. Right,
Classic dad move.
classic dad move. Yeah, I got caught, and she said, "Dad, those are mine. Those are mine." And I said, "Well, sort of. I mean, who bought the French fries?" And yes, those were on her plate, but she didn't realize the source of her French fries are obviously from God. But mom and dad had to work to pay for those French fries to put on her plate, and so I kind of control them, because I am the source of the French fries. I didn't really need the French fries, but the priest and the Levite perspective on possessions is, yeah, I want to hang on to that. I don't really want to help this person. I'm certainly not going to pay for them to recover and stuff. I'm going to keep it, right?
Hmm.
And so we all have that tendency towards selfishness and scarcity, right? And this
Right.
causes us to tighten our grip on possessions so we miss out on other blessings. If you were in my studio here, Jesse, and you saw my cup of coffee and you wanted it, you could come grab it, but I'm holding on to it. And if you pulled on it, I'm going to hang on to it tighter. And so, do we have the perspective that what's mine is mine? I'm going to keep it. But what about the perspective of the Samaritan?
The Samaritan's perspective is different. It's the third, and it is what's mine is yours, and I'm going to give it. Selfish people don't want to be inconvenienced. Significant people are giving, kind, and sharing.
That's right. And the Samaritan said, I'm going to give aid to this person. And not only am I going to give aid to this person, I'm going to pay for their recovery. And so the Samaritan, and remember who the Samaritan was in this. The Samaritans, Jews didn't really want to be associated with Samaritans, but this
Hmm.
Samaritan here is stopping to render aid and also paid for his recovery and stuff like that. And so, we see a different contrast. And if we apply this to our possessions, we kind of see that, the robbers are going to take, the priest and the Levite is like, yeah, I'm going to hang on to what I have. And then the Samaritan was more giving. So what that kind of leads to a fourth perspective on money. And this is based on the biblical principle of God's ownership. We can see this in Psalm 24:1 or even James 1:17. And that perspective is what's mine is not mine. I'm simply going to steward it. Now,
Hmm.
this perspective, Jesse, changes my mindset about how I handle possessions at my disposal. It's not mine to keep, but it is mine to manage.
I'll read that First James 17 really
Yeah,
fast. It's chapter 1, verse 17. Every good gift and every perfect gift is from above, coming down from the Father of lights, with whom there's no variation or shadow due to change.
and this just ties into our perspective for the show. I mean, it's not something we came up with. It's in Scripture.
Hmm.
God owns it all. God created it all. God owns it all. And we're here to be stewards. And we have to take that perspective when we're looking at anything when it comes to our wealth and how we manage that. And so that's why we do this show. So we believe that, my gifts are not mine. Jesse, your gifts are not yours. God has just loaned them to you to use so that we can add value and help people. And I think that perspective, this fourth perspective, really grounds us and helps us steward our gifts and possessions well. And really, when you think about it, it opens up opportunities to bless and help others.
Mm-hmm.
But I think there's always a little bit of a robber in us. There's always a little bit of the priest and the Levite in us. And if we constantly go back to the Word and we're reminded of what God has done for us, that He has created it all, we are simply here to help manage that in our time on Earth.
Mm-hmm.
It really puts a different perspective on what it is we're supposed to do and how we
It really
bless
does.
and help
A
others.
heavenly perspective as well.
Yeah. So when we come back to the next segment of our show after a short break, we're going to open up and talk about the market, really dive into that just a little bit, let you know how things are going. But please call us here in the studio at 452-1120, 452-1120. If you're listening on social media, type in the chat box there and let us know you're listening. You're listening to the Spend Life Well show. We'll be right back.
Join us on Facebook to see the fun that goes on at the Bridge Austin. There's behind-the-scenes pictures, live videos, and news. We have a wealth of faith to share with you. Just look for the Bridge Austin on Facebook and hit like.
Do you worry about your finances? Thinking about getting kids through college? Or just dreaming about retirement one day? Hi, I'm Certified Kingdom Advisor Mark Trice and founder of Clear Vista Financial here in Central Texas. Scripture teaches us not to worry, but to prepare for the future and to commit our plans to the Lord. But sometimes that is hard to do in practice. Wouldn't it be nice to have an advisor, one that shares your faith, who will guide you along the road towards your financial goals? Visit us at spendlifewell.com or give us a call at 800-491-4508 for a complimentary consultation, and we can show you how to spend life well. Visit us on the web at spendlifewell.com. That's spendlifewell.com. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Welcome back to the show, everybody. This is the Spend Life Well show. I'm financial professional Jesse Hamilton, and I'm joined, as always, by Certified Kingdom Advisor Mark Trice.
Yeah, remember, we've got a webinar coming up right after the show. You can go to spendlifewell.com/events. That's plural because we have lots of events, but spendlifewell.com/events. And you can register for the webinar coming up at 9:15, just right after the show. If you're not able to make it, go ahead and register, and we will send you a recording of that webinar sometime late next week. So don't want you to miss out. A lot of good information there. If you can't listen today because you're out driving around, go pull over, get on your phone and go to spendlifewell.com/events. That's a event with a plural event there with an S, and register for that. We also have an upcoming webinar Tuesday the 12th, I think that is, where we're talking about all the things you need to do to prepare for retirement. Jesse, what was happening this week in the markets?
Well, I'm going to share a few things on what happened on the major indices. If you're interested in this section of the show, you should join us for that webinar coming up, because we're going to be able to show you actual charts of indices and various things that are going on. So let's start off with the S&P 500, the large cap U.S. stocks. It's a very popular index that we like to cover. It actually had a little bit of a mountain shape where at the beginning of the week, it went up and then it actually came back down at the end of the week. But that index was pretty much flat this week, plus 0.06%. But that's a part of minus 4.62% for the year to date. So
the first quarter.
Yeah, the first quarter is definitely negative on that one.
Yeah.
But we like to follow that index as sort of one of our benchmarks. But let's also talk about the NASDAQ. So that's a little bit more of a mover. It's more technology oriented type stocks. It was also pretty flat this week, plus 0.65, and it's minus 8.84 for the year, Mark.
8.8%.
Yeah.
Yeah. And that's not even from the highs back in November, right?
No, it's not.
Yeah.
Peak to trough, that index really struggled during the month of March.
And just so people know, when Jesse says here, if you're watching on video, I'm putting my hand up here. Peak to the trough is basically the high to the low before it begins to kind of work itself out. And what we've kind of seen here is that, we had a little bit of a bounce, and we'll talk about that more in just a second. I don't want to interrupt Jesse's thought process, but I'm sure you're probably thinking about what's something going on in your portfolio. You can give us a call here in the studio at 452-1120, 452-1120, and we'll answer your questions on the show.
Right. If you have a 401k or an investment account somewhere that you just kind of buy and hold, set it and forget it, you probably saw that it dropped quite a bit. And then the second week of March, for some reason, it went back up. And then at the end of this week, it went back down. So that's kind of why we're talking about that.
Yeah. And I think a lot of people are going to get their first quarter statements
and be discouraged.
They're going to be discouraged. And you know what a lot of people do, Jesse, is they don't even open it. They know,
they're scared to look at it.
Yep. They know the market's down and they just don't want to know. And what animal does that kind of remind you of, Jesse, when they get nervous and they don't want to know, face reality?
I don't know. A turtle?
An ostrich. No, an ostrich. Yeah. Well, I guess a turtle kind of goes in a shell and hides. Yeah.
Yeah.
But an ostrich, they're going to bury their head in the sand. And folks, I cannot tell you the number of times I've heard this same story from people that didn't work with us way back when, or don't work with us now. I asked them, did they open their statements? It's like, no, I just don't want to know. And you are responsible. You are the steward, remember, to manage that 401k. You have to be actively involved, or at least actively aware of what's going on in your portfolio. We've been charged with it. Scripture says we're here to be here to be stewards of what God has blessed us with. Yes, he allowed you to go earn that money, but come on, we got to take control and make sure that we know what's going on.
So if you have a balanced or a moderate type of investment style in your 401k or your IRA somewhere or investment account, you're probably holding a little bit of small caps. So these are smaller companies in the United States. Do remember the dollar amount, Mark, for a small cap? Is it 50 million to a billion
these are small public companies, so they
Yeah.
typically have revenues less than, I think, 500 million.
But
they are publicly listed. So
right. Well, they were also flat this week, plus 0.7%, and they're minus 6.69 for the year.
Yeah.
But let's talk about
how have emerging markets done. I don't know if you can pull it up real fast.
Yeah, I can.
I know you're about to talk about bonds, because that's really the one that people need to pay attention to. But
well, emerging markets had quite a large peak to trough here, over 20% down.
Okay.
From the middle of January to the middle of March.
Okay.
March 15th, for some reason, was the low for that index.
Okay. Well, and a lot of that's influenced by the strength of the U.S. dollar, inflation, all those different things. So, So let's talk a little bit about bonds, because that's the one that I think people are just unaware of.
Sure.
And how dramatically it's impacting people's portfolios.
Yeah, if you just click autopilot on your investment account, like a lot of people do, you're probably holding at least 30%, maybe 40, 50% bonds. And arguably the most safe bond is the Treasury bond, right, Mark?
Well, that's the one guaranteed by the government, but I'm just wondering how good is that guarantee these days. But yes, that's true.
So we have an index that follows the 20-plus year Treasury bond, and that index is performing quite poorly right now. Peak to trough, minus 17.7%, and year to date, it is minus 10.6.
Wait a minute, Jesse. Wait a minute. I thought bonds are supposed to be safe. When the stock market's going squirrely, bonds are a place that everyone's supposed to go hide.
That's what the theory says.
That's what the majority of the industry tells you, that if you want to take risk off the table, you add more bonds. Well, folks, that's not working, and it will not work for some time. I think that, even the 10-year Treasury, this year alone has gone down in value, meaning rates have gone up.
Mm-hmm.
I think I last saw yesterday over 50%. And this impacts the things that, if you're borrowing money, mortgage rates have gone up, rates on credit cards have gone up, the rates on borrowing for a vehicle have gone up over 50%. That 10-year Treasury has since the beginning of the year. Now, bonds are an integral part of most people's portfolios that are getting near retirement. So if half of your portfolio is down 10% and the stock market's down 5 to 10%, what does your portfolio look like? This is not the thing people want to hear as they start getting closer to retirement, because
Mm-hmm.
that's significant money. When we go back to 2008 and 9, we remember, and sometimes people would joke with us, they would say something like, yeah, my 401k is a 201k because it's been cut in half. And you don't want that, folks, but you need to pay attention and take ownership and steward your 401k or other assets as we go through this period, which I think is going to continue to be quite volatile.
Mm-hmm. Well, I wanted to take a moment to talk about a few sectors.
Yeah.
That, Mark, that's a lot of the way that we look at managing our clients' money, is to look at the different 11 sectors of the stock market. And we've been talking about energy all year, and how well energy is performing. But this week, energy actually was down 2%.
Oh, yeah.
Yeah.
There's been a little bit of pullback there. Some of that may have had to do with President Biden releasing strategic reserves. It's not an emergency. I know that's what that strategic oil reserves are for, but that's probably a little bit more political. That may have had a little impact. And every time, oil's been moving, price of oil has been moving on the headlines. So early in the week, when it was reported that Russia and Ukraine were getting back together to talk about peace talks, well, that was all hopeful. Price of oil went down a little bit. Even yesterday or Thursday, when President Biden announced that he was going to be releasing 1 million barrels a day from the strategic oil reserves, which is not really that much considering that we use about 23 billion barrels of oil every day in the United States. But that had a little bit of an impact. So yeah, those things are, energy sector is still very strong.
Mm-hmm.
Just had a little bit of a pullback this week.
Well, this is something that we can get into more detail in the webinar about. We can show you the chart. We can talk about the relationship between the price of oil and then the price at the pump, which generally takes at least 3 weeks to trickle down.
Mm-hmm.
But we did see a few sectors that are more defensive perform well over the past week and the past couple of weeks. The highest performer with a really strong close on Friday's trading session was real estate. And we're also seeing utilities and some consumer staples doing well, which is indicative of people making more sensible purchases.
Okay. All right. So some defensive type sectors are kind of creeping up in strength, which indicates that maybe there's more volatility coming. I think a lot of people are still nervous about the stock market. I still am. But a lot of people thought we'd get a little bit of a bounce, especially off of those March lows, middle of March lows. So we think we're going to typically see that one, and it's kind of that bounce, Jesse, is a little tough to explain,
Mm-hmm.
given all
Yes,
the
it is.
headwinds we still face. I mean, what do we got going on that are headwinds that you can think of?
Well, we've got inflation, we've got war, we've got rising interest rates at the Federal Reserve, we've got political policies being pushed around very
And
often.
most of the time, we think they're wrong. Most politicians are behind the curve on this,
Right.
and then you got commodities too. Yeah,
Oh, commodities are.
yeah, they're
We're,
spiking.
we're going to talk about that in our webinar, but I mean, there's things happening in the commodities exchanges that are unheard of and irrational.
Yeah, and it doesn't help that farmers in Ukraine were not able to plant for the spring season yet. Most of them haven't, and they supply about 30% of the world's wheat.
Mm-hmm.
So, yeah,
And
stocks have every reason to face a sell-off here, but they didn't in the last 2 weeks. They kind of went up.
there's also the dilemma of, if gas is so expensive, why don't I buy an electric car? But in reality, the electric cars take all these precious metals, nickel, palladium, platinum, to build. And they're just not, the prices are unreasonable right now.
Yeah, and the trading on the London exchanges in the last 2 weeks, I think, has been halted at least 3 or 4 times for trading in the commodity nickel. And it's just, things are very volatile right now, and things we have not seen in a long time. Jesse, I know that you probably got, if you got some more information, go ahead and share it with us. But I was just thinking about, a lot of people haven't experienced it, especially the younger generations. I mean, I was in grade school during the late 70s, early 80s, but can remember people losing their jobs during the recession of the early 1980s. And, you had friends that had to move away because parents lost job and they had to go find work. And, it's a time that we had stagflation. And the Federal Reserve is trying to engineer what we call a soft landing. And historically, the Federal Reserve has never been able to engineer a soft landing ever. And
Well, it's
we're
hard
gonna
to land a plane when there's a thunderstorm in front of you.
right. You got, lots of potential things that can go wrong. And if you took off too early or too late, which the Fed has done, you're behind the curve and you're not able to impact the situation as much as you want to. So what it means is, I think we're probably going to have some significant rate increases in the coming months. And so the cost of borrowing is going to go up. Unfortunately, this is probably not going to get passed down to the average saver. In other words, you're not going to see higher rates or yields on your savings accounts. You're not going to see that because these rates that are charged overnight Fed funds to banks to borrow amongst themselves, they can't pass that on to the consumer. And so it's going to cause a ripple effect there. And if we continue to have high inflation and higher interest rates and a slowing economy, this is what creates the stagflation.
Well,
And
hopefully
so,
in the next segment, we can address really quick the mortgage industry and the housing market, because we're already seeing mortgage rates higher than they've been in many, many years.
yeah. And so we'll talk about that a little bit in the next segment. But we want to hear from you. Give us a call here in the studio, 452-1120, 452-1120. And when we come back, we'll talk more. We'll take some questions from our mailbag. We got several questions this week that we'd like to go through, and maybe that'll prompt something for you. But give us a call here in the studio, 452-1120. You're listening to the Spend Life Well Show. We'll be right back. Did you know the Bible talks about money and possessions over 2,000 times? Well, maybe we should pay attention. Hi, I'm Mark Trice at Clear Vista Financial. We work with clients to steward their resources based on a foundation of biblical wisdom. Learn more about Clear Vista Financial by visiting our website at spendlifewell.com. That's spendlifewell.com.
Securities through Cambridge Investment Research, Inc., a broker-dealer member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Welcome back to the Spend Life Well Show. You've joined us for our last segment of the day. I'm Certified Kingdom Advisor Mark Trice. I'm joined, as always, by my fellow financial professional, Jesse Hamilton, in the studio.
Hey, everybody.
Here. So it's been kind of an interesting week, Jesse, and I think we're going to talk more about that in our webinar, which comes up right after the show at 9:15.
Mm-hmm.
If you'd like to listen in on that, or you'd like to get a recording of that, we encourage you to go to spendlifewell.com/events. That's plural, events plural, and register for the show. You can also see other upcoming educational webinars that we put on for people. We love helping people, educate people about their finances. I think the webinar we have coming up in week after next is on preparing for retirement and all the things you have to do. There's a lot of work. And
It's
so
a big
we
one.
encourage. Yeah, we encourage you to join us. But give us a call here in the studio, 452-1120, 452-1120. Jesse, I'm going to say let's grab a question from our mailbag that we received this week. What'd you find?
We have a question from Hannah. So, Hannah, if you're listening, we're not going to use your last name, but we would like to answer your question here. We thought it was relevant to our conversation earlier. She asks, from a professional perspective, what are some practical ways to combat the effects of inflation in my daily life?
Well, if we want to get down to the nitty gritty, a few weeks ago we talked about what's the optimal time to buy a tank of gas?
5 o'clock in the morning.
Well, yeah, early in the day and early in the week, because prices tend to change throughout the week and throughout the day for that. But I was just thinking about what we're doing in our own household.
Okay.
Jesse, we can talk about investments in just a moment, but what we're doing in our own household is just simply we're buying a little extra right now when prices are where they are. We just look at the price of a bag of chips, and because we go through a lot of potato chips in our household, that seems to be the snack of choice for my teenagers, and we're just buying a little extra and setting it aside. And same thing with staples like pasta, or even having extra packages of beef or chicken and whatever you tend to feed your family. And we just been, trying to stock up a little bit more because we know those prices are going to go up because of inflation.
Mm-hmm.
Now, a lot of times people call us up with questions about, what do I do with my investment? So there are certain things that tend to perform better. That's not to say that they'll perform in a positive way, but they tend to perform better during an inflationary type period. Well, it could be something like emerging markets or real estate or small caps or energy.
Mm-hmm.
But a lot of people think, well, I'm going to buy gold, and really that's probably not the right way to hedge against inflation. There's lots of questions here about what we can do, but
Are you saying buying physical gold or buying a gold fund?
well, either one, they're not going to necessarily respond in the same way that people have always thought. That because there's so many commercials out there for buying gold, whether it be physical. Most of the commercials that are out there about buying physical gold, and people think that's the end all be all. And there's a lot of mystery out there. There's a lot of myths that are put out there that the world economy is going to collapse and everybody's going to use gold. And people are they're basically pushing buttons, the fear buttons, if you will, to try to get you to buy their gold. And trust me, they make a lot of money when you buy it.
I'm sure
But
they do.
there's lots of things you can do on a very practical standpoint, and just how you shop at the grocery store. Buy a little extra now, because those prices are going to go up. And don't be surprised. We've already heard a few warnings about this, especially come the fall and next winter. People are forecasting, and I'm not saying that they're right, but people are forecasting that we're going to start seeing some shortage of certain types of foods. So there's really, the inflation really is the dangerous thing about inflation. And we'll take another question here in just a moment. The dangerous thing about inflation is that it eats into your purchasing power. Now, this happens in a lot of subtle ways. But let's just say that inflation's averaging at 2%. It takes about 35 years for the real value of your money to get cut in half. But that means if I have $1,000 a month now and 2% inflation in 30 years or so, I'm only going to be able to buy about $500 worth of stuff. But when you have 5% inflation, this happens a lot faster, probably around 14 years, that you'll see your purchasing power get cut in half. Last month in February, inflation was 7.9% and year over year. And I suspect when we get numbers this next week, it's going to be even higher. That means the purchasing power of the paycheck that you receive, or the Social Security check that you receive, is going to dwindle over time. And that is very dangerous. Our purchasing power is going to dwindle over time. And to top it off, if we're being very conservative and we just want to park our money in the bank somewhere and not invest it, well, those yields that you're receiving on those savings accounts are dramatically less than the rate of inflation. And so if you're a big saver, you get hurt the worst because you're saving in things that aren't giving you a yield that are matching inflation or exceeding inflation. So you may take more risk by investing in stocks and bonds or different mutual funds, but at least you have the chance to potentially perform better than inflation. So some practical things there, and Hannah, and some things that you can do with your investments. Make sure that you're in the right investments and that you're not too conservative for your risk tolerance, because that can really dramatically impact your future wealth that you have there. So, Jesse, let's take one more question.
Well, Mark, I have a random, not so random anecdote here. Have you ever been to the Bank of England in London?
No, I have not. It was not on the tour the last time I was there.
They have the world's largest reserves of gold, several 100,000 bars of gold. But when I was visiting there pre-COVID, they had a little box, and you could only fit one hand in it, and they had a gold bar in there. And they said, if you can reach your hand in there, if you can lift the gold bar up, you can keep it.
Oh, really?
And so
not even pull it out, just lift it up.
No, if you can lift it, you can keep it.
Now, how heavy was it?
The leverage is at a place where it's like humanly impossible to lift it.
Oh, okay.
And you can stick your hand in there and scoot it around, but you cannot lift it up. And I just thought that was funny.
So I gather you didn't take that bar of gold home.
I unfortunately didn't make it home. And this is pre-COVID, when you could still touch things in public.
Right. Well, and the challenge with owning physical gold is you have to store it properly, because it can corrode over time, and it is a metal. So you just have to be careful about stuff like that. But inflation is real, and no, I did not. Next time I go, I'll have to go there. But I haven't been to London in a number of years. But that's one of those things where inflation is real, Hannah, and unfortunately, many of you have never faced this before. Some of the folks that are a little bit more seasoned, that were adults during the 80s, you kind of know what's going on when we had 15% mortgages, and we had inflation rising. And I think that's something that's different this time for sure, is that rates on CDs and savings accounts went up as well. And I don't think we're going to have that this time, because
Mm-hmm.
it's going to be more and more costly for banks to pass any of that on to consumers, because the banks are really making a lot of their money now off of lending
Right.
versus keeping your assets. So, what's another question from our mailbag, Jesse?
We have a listener named Paul. So if Paul, if you're listening
All
here,
right, Paul, thank you.
he asked, what are some red flags to look out for in a financial advisor? How can I tell if somebody really has my best interest in mind?
Yeah, that's a great question, Paul. I wish there was just a telltale sign that you could talk to that person, and if they said these 3 magic words, you know not to work with them, or if they said the 3 magic words, you know that you could work with them. I think for listeners to this show, you want to make sure that your financial advisor is a believer that shares the same worldview as you do. I think that's a big one. And of course, you can search at kingdomadvisors.com for any type of certified kingdom advisor. They certainly are trained in understanding what it means to manage your wealth from a biblical worldview. That's one thing. But two, one of the things that as people come to work with us and they tell us, that they talk to other people, I usually ask them, it's like, so what did you like about them? And they're kind of taken off guard about that, because they obviously didn't choose that person, but I like to know what they liked about them. It's like, and they never can really offer anything positive about that experience. But I will say this, Paul, if you feel like you walk into an advisor's office and they tell you exactly what you need to do without getting to know you, that's a red flag.
Mm-hmm.
You want an advisor that listens and understands your situation, your story, and what your experiences has been with managing wealth. And we see this a lot from clients that feel like that their advisor's not listening.
Hmm.
And if your advisor's not willing to invest the time to get to know you before jumping into how great they are, and this is exactly what you need to do, that would be a red flag to me. One other one, we saw this recently. If your current financial advisor is not very forthcoming with information about how you're doing, that should be a red flag.
Mm-hmm.
We were talking to a prospective client, and they never have received a statement from their quote financial advisor. And when we encouraged them to go ask for one, he wouldn't give it to them. That's a big red flag, right?
Yeah, that's not even a red flag. That's just a legal issue.
Well, it's a legal issue, but that should be a tsunami warning red flag.
Mm-hmm.
That something's not right there, and you want to make sure that you get access to your statements and things. If you get things electronically, sometimes people just miss the email or whatever they're saying that they have a statement available. But at a bare minimum, that advisor should be able to turn around within a few minutes after talking with them or their office and getting you your statement to show your performance and balances and things like that. And the other thing is that you want to make sure that your advisor is not doing a cookie cutter approach to that. And the number one question that you can ask that prospective advisor, Paul, is what are you going to do when the stock market goes south? What are you going to do to protect my portfolio when things get bad? And if they don't have an answer for that, maybe you need to keep looking. But so those 3 things.
Okay.
A believer, a good listener, very straightforward, responsive, and one that has a plan to protect your portfolio when things get bad.
Okay.
So I think we got time for another question, though. You got another question in the mailbag?
Yeah, let's see. I'll pull up the mailbag here. We had a listener ask about, he's in his 40s and he's married, and he likes to give every month to his church. And he just asked, what is the best way to do this? I don't know if there's specifically an answer that you have for that, but he obviously likes to give a percentage of his income. And his question is, what's the best way to do it?
Yeah, I mean, it's so easy to give to different organizations now. I know. I mean, heck, the other day I was sitting in church. I actually got there early. You know, we have to get 6 people ready in our family to go to church. We were actually there beforehand. I was watching a little slideshow, and I could send a text to a certain number and be able to give. Man, it's so easy.
Yeah, that is easy.
I mean, I haven't, you know, this, you know, if you're wanting to give, the best way to do it is make it automatic. In other words, if you've got a budget that you're doing every month, make sure that giving is the top line item in your budget. Make sure it happens first.
Mm-hmm.
Give first, and that's one of our philosophies, and it's also a philosophy that we see played out in Scripture. We are to honor and glorify God with our gifts. He doesn't need their money, but the act of that is an act of obedience. It's an act of worship, and you typically want to give first and make sure that's the top priority in your mind. Also, there's a number of different ways. If you are a generous giver and you want to give more and be able to control it, but you're not sure where to give now, you can look at organizations like the National Christian Foundation. I think that web address, Jesse, is what, ncf.org? ncf.org.
I believe so, but I'll confirm for you.
Yeah. National Christian Foundation, and this allows
ncfgiving.com.
ncfgiving.com. Well, I had it all wrong together. I know they're going to be upset with me for giving the wrong email or web address. ncfgiving.com, and you can set up a donor advised fund where you can go ahead and give, and it leaves your estate, but you've got more time to be able to disperse those gifts to things that you see pop up. You know, a lot of times, Jesse, you know, my wife and I, of course, give obediently to our church, but there's other things, opportunities that come up. I know something that they're going to be doing here at the Bridge is an Asian ministry that is looking to raise money to develop and dig water wells in Southeast Asia. So we're going to be supporting that. We'll be talking about that on a future show. But hey, you've still got time to register for our webinar at spendlifewell.com/events. If you can't make it, just register. We'll send you a recording later on. And Jesse, you know, we're getting to the end of the show. If you want to talk to us during the week, you can give us a call at 800-491-4508, 800-491-4508. You've been listening to the Spend Life Well Show. God bless you and have a wonderful day.